All right, I'm just going to wait a couple moments here as I see the attendees coming in before we begin. Okay, well, hello everyone, and welcome to the panel, How to Digitize Your Mortgage Business, hosted by the Canadian Lenders Association. We have a really wonderful group of panelists today and a great discussion moderated by Christina Ray of Lendesk. Christina is going to take us through a panel discussion, and after we will be accepting questions live, so feel free to submit them throughout the panel, and hopefully we'll have time to get to them at the end. And as always, this panel is being recorded and will be emailed out to all of you afterwards. But before we begin, I just want to give a huge thank you to our sponsor for this panel, Lendesk. Thank you so much for bringing this great group together. We're very excited for the conversation. But without further ado, I'll hand it over to you, Christina, to kick it off.
Thanks, Danielle. Hi, everyone. I'm Christina Ray. I'm the VP of Marketing at Lendesk, and I'll be your host and moderator today. Looking forward to a great panel. So this webinar will be focused on how lenders like yourself can digitize your mortgage business by ultimately helping help with your goals, whether that's providing a better customer experience, streamlining some of your internal processes, or if you're looking to grow your business, whether in the mortgage broker channel or with your D2C solutions. We'll be chatting about what digitizing actually means, what some speakers on the line are doing themselves, and what you can start thinking about today and in the future to help ensure you're staying innovative in your space. So we've got 4 incredible speakers on the line, and since I can't do them justice, I'll actually let them quickly intro themselves. So why don't we quickly go around the room? Jesse, why don't I start with you and introduce yourself?
Sure. Thank you for having me. Thanks all for joining us today. I am Jesse Bobrowski, VP of Business Development and partner of Calvert Home Mortgage Investment Corporation. Calvert Home Mortgage Investment Corporation is a MIC, as in the name. We're focused on providing short-term mortgage solutions to residential borrowers.
Brilliant. Thanks, Jesse. Hi, Nick. Why don't we pass it over to you?
Sure. Nick Bednars. I lead the operations practice as well as mortgages and lending for Simply Financial.
Brilliant. All right, Alex, thanks for joining us today.
Happy to be here. So my name is Alex. I am CEO and founder of Perch. We're a mortgage technology platform. We essentially solve 2 core problems: helping first-time home buyers get into the market more effectively, and then helping homeowners leverage their home equity to build wealth and retire comfortably. We're a fully digital platform. We're sprinkled across Canada, our team is anyways, and yeah, happy to be here and share some of what we've learned and some of our practices.
Brilliant, thanks. And hi, Greg, nice to see you.
Okay, great. Thanks again, everybody that's here. I'm Greg Williamson. I'm the Chief Revenue Officer at Lendesk. Lendesk is a mortgage technology platform as well. We have a few products. Our flagship products are Finmo, which is a mortgage point of sale front-end solution. We also have Gateway, which is a light LOS system, and we have Lender Spotlight, which is the preeminent area for mortgage companies to show their rates for individually for mortgage brokers particularly, not generally for the general public, although we do have an API for those that want to get access to that. And Lendesk is also is majority owned by Rocket Mortgage. So we're the technology arm in Canada for Rocket.
Brilliant. Thanks, Greg. All right. Before we get started, I just want to echo what Danielle said about the Q&A. We'll be doing Q&A at the end, but please get your questions in. I know for me, I always get a bit confused with Zoom webinar because there's a chat and a Q&A. If you could please put them in the Q&A portion and we'll monitor them and we'll moderate a Q&A at the end. All right. So I kind of want to start off by setting the stage when we talk about digitizing your mortgage business. It's 2022. We all know we need to be digital or online in some shape or form, but there's so many varying definitions of what that actually is. Many, many, many years ago, when we talked about digitizing your mortgage business, it meant having a website. Then it turned into having some sort of lead capture apply now button on your website. So I'd love to kind of look at the lens today at what lenders should have in place, almost as a baseline for what it is to digitize your mortgage. Like what should lenders be thinking about today as a baseline? So Nick, why don't I kick it off to you to chime in, and then everyone else, please chime in to the conversation as you see fit.
Sure. I think simply is well, we're in a unique position only because we're our former iteration or a different brand was a face-to-face channel. So we actually were not a digital brand up until 2017 when we launched Simply and rebranded. So what we have seen though is that mortgages are definitely something that people still want and demand to have a human interaction. They want to have that human touch. However, it is a very difficult asynchronous process if you can't actually guide people through gathering information and the appropriate documents, or even getting stuff to avoid getting documents for people that's relevant to their specific scenario. So I think that's really our focus right now is we are building out that layer. And then of course, what really matters most to a client is the removal of stress. That's all we ever hear. It's beyond any other demand we get. And removal of stress just means make it as simple as possible and make your decision as fast as possible. So we've invested very heavily in auto adjudication. And then our next phase, of course, is to layer on that digital funnel that feeds through to a human.
Brilliant. Love that. Jesse, why don't I pass it to you? What are you thinking about when it comes to digitizing your mortgage business today?
Yeah, really similar to Nick, which is how do we provide that amazing client experience? And it is indeed that, providing that effortless experience. So making it easy on the client. The more we can auto adjudicate, freeing our decision makers, our underwriters, to really work with the clients on some of the trickier parts of the deal, maybe additional handholding, providing that human touch that still people want, is something that we think is a must-have within the digitization process. Also, how do we ingest documents? How do we get it into our underwriting platform in order to do some auto adjudication and reduce the data entry? And then finally, what are we using once we have the data in? Analyze and put it in front of decision makers for risk management. How do we use the information to better manage our portfolio, provide more up-to-date products to borrowers, really be able to create lending solutions based off of the information that we're gathering from the market.
That makes a lot of sense. So you both kind of talked about streamlining processes, using digital means to do so, but still having that human touch. Working at a technology company, I can't help but have a light bulb go up where I see the input of technology to help that process. So Alex and Greg, maybe, both of you can chime in on what your thoughts are on a digital experience in today's lens.
Sure. I'll go.
Go ahead, Greg.
I knew that was going to happen, but
go ahead.
I'll be brief. I think I really agree with both Jesse and Nick, and it's certainly the learnings we've had from Rocket, who's the world's largest mortgage provider and also the pioneer in sort of that digital push button get mortgage. People don't know, there's a lot of human involvement in that. But I will say that one place that I think we've seen a lot of uptick is giving the borrower a portal, a place where the borrower can go to do all the things that they need to do. And that sounds super simple, but man, it's shocking to me how many people still, institutions don't do that. And it's important because borrowers, it's important from both sides. No more emailing documents back and forth. No more communicating with borrowers through emails that have a 52 chain now. I don't know where I'm supposed to be at. As Nick said, anytime a borrower has any amount of like a slight uptick in stress, it's the possibility that they go somewhere else. So, make it simple, document uploading, communication so that the borrower has one place to go. So I know everything I need to do in terms of completing this mortgage. I think that's important too.
Yeah, absolutely. And then just to really echo some of those components, I think the auto adjudication to me really ties into where we focus a lot of our efforts is automating that top of funnel. So things like, what's my mortgage rate going to be? How much can I qualify for? Like really those really baseline questions when people are more in the exploratory stage of their home ownership or home buying journey. It's so important to be able to get quick insights so they have an idea of what ballpark they can play with. So we've spent a lot of time there, and then we found that the combination of auto adjudication, but then layering on optimization is really key. Because what happens a lot of the times is people, what I'll see a lot in qualifying calculators, or what are your monthly debt payments? Somebody might interpret that completely different than somebody else. And, you know, depending on which calculator they use, they might qualify for 250, 600, 800, and then it's like, what number is it? So really being able to steer people to establish a general framework of what they can work with. We then try to get the mortgage advisor involved at that point, where it's helping them really optimize further from there, and continuously investing in the technology and our algorithms to find those use cases where the algorithm didn't fit, and then keep expanding it so there's less use cases that really need a lot of hand-holding.
Okay, I love it. All four of you have mentioned auto adjudication, which I want to get to at one point, but you also all mentioned the client or the customer or the borrower or the Canadian experience. So, I mean, I know Jesse and Nick, you both do things to consider the client experience and what they're going through. Nick, I know at Simply you do a lot of work to understand your customer and the insights they provide. Would you say that helps drive a lot of what you do and the decisions you make?
It's probably the only thing that drives the decisions we make. And actually, there's one interesting point you made is like what you said, like about Canadians, because that can mean many different things. And I'd say if you look at the Simply book, it's been around for almost 25 years under two different brands. So we have a wide variety of demographics at play. Like the existing clientele is very different than who we're acquiring, and we're definitely over-indexing in the newcomer space, which requires a completely different lens and a completely different way of looking at this product specifically. I would say that we do obsess over them for sure, and you'll see everything from the surveys, the panels, the outreach we do, and just listening through, whether it's complaints or social posts. This is where we get all of our insight from, and that is what's driving what we're building. Like what we're building is all about stress release, and I think actually it's probably shouldn't be a secret. Is like that we actually are working with Greg on this, because what we did see from what we've heard from clients, it did bring us to look at Rocket. Like this is something that is best in class in the world, and we did want to emulate that, but in a manner that made sense for our client base, both current and who we're acquiring on a go forward.
Yeah, that makes a lot of sense. And Greg, you know, playing on the same home turf, I know that we at Lendesk are really, you know, we sell products to financial institutions and mortgage brokers, but our end game is helping the everyday Canadian or the borrower have a fantastic experience. Is there anything you want to kind of chime in on what Nick just said?
Yeah, I think so. It's interesting. Auto adjudication. Nick and I have joked about this a couple of times. 2 years ago, you could get thrown out of a room at a bank level with risk managers involved if you started talking maybe 3 years ago, maybe whatever. But now all of a sudden, it's like it's an arms race to do it. And I think that the interesting part is also, where should it live, or where can it live? Like to Alex's point, it used to be that, hey, to get leads online, I should just give them some value. Well, tell them how much they qualify for, and I should be pretty close. But I think the puck has moved on that. I think it's now, I need more information. I don't know. I want to know, am I really approved, or is this just some kind of like, you know, you're pretending to tell me I'm approved? And so if we can actually do some of that auto adjudication earlier in the process, I think is also a really important thing. And it's something that we think a lot about at Lendesk. And so certainly the banks are going to have their own back behind that, but I mean, I also think it could be pulled forward a bit.
And Alex, I know you've had some, you know, touch points with auto adjudication. Anything you want to chime in on at this point?
Yeah, I think where we've heavily focused is the bulk of our clients really are more on the A side historically. But what we're seeing in current macro trends is really like a lot of A is no longer really as available for a lot of people. And then sometimes they might even not, yeah, the credit box is the same, but the macro keeps changing. So what we're seeing is it's also sometimes some use cases where somebody might be better off just getting a private second than breaking their first at 1.9%. So we've kind of evolved with it. So we've invested a lot in expanding our algorithms. Where now auto education to me has to go beyond that, where it's actually more like optimization or solution optimization, where if I just auto adjudicate and reject you, how do I add value beyond that? So we're instead looking at what does A look like? What is A in private? What is B? What is B in private? What is private? And then kind of working backwards to see which one's actually the best solution. So that's where we kind of see auto adjudication evolving, because if let's say like you have a very strict limit and you're auto adjudicating, but 40-50% of clients can't get through, then at some point you have to look at, well, is that all I want to do is just tell people they can't qualify and then invest on what can I do after that, especially in today's climate, I think.
Absolutely. Jessica, I see you nodding your head. Anything you'd like to chime in on?
Yeah, with our short-term focus, a lot of instances where borrowers come to us is when we're solving problems at the last minute. Something came up with the bank loan where they can't fund, we need funding tomorrow, the next day, high stress scenarios. And the auto adjudication part can be helpful because the client can work with us in real time. Many times though, the documents aren't in front of them. They can't upload them. That's where auto adjudication can sometimes break down because it can't ask all the questions that, or at least not today, that a trained underwriter can. So is there another house? Can mom and dad step in? Do you have more for a down payment? So it's a tricky mix between auto adjudication and having that human touch where they can provide almost a concierge service to ask the important questions, to provide a solution, to look to get the deal done. So that's critical for us is providing that, hey, I want to be interacting with you in real time and getting answers in real time. So us being able to push those answers out, but then also interacting with them because they don't know what they don't know, and we need to be able to pull that information out of our clients from time to time, which is tricky to do on the auto adjudication part.
Yeah, absolutely. And I think, maybe you can all chime in on this, Nick, I think you would know this as well, but why do you think risk leaders at banks have gotten their heads around auto adjudicated mortgages?
Largely because I think that it's the technology's evolved quite a bit. Like when I first started working at the bank, we were auto adjudicating unsecured, for example, but it's just binary. It was list driven. It would calculate TDSR based off of the bureau and look at a beacon score, and that was it. It was yes, no. There was no answers about it or buts about it. Now it's a highly matrixed, highly nuanced thing where we're pulling in data sources that are immutable. And I think that's what makes it actually work. So if I don't have to ask you about your down payment because I already know where the money is and how much it is and where it is and how long it's been there, and I don't have to get that document and I could trust it, that's a big deal. I think the only thing that's holding us back is still going to be on income. Because I think a few people have mentioned the macro environment. Like what we're in right now is a very interesting space because I think the amount of fraud for shelter, for example, that at least it's attempted is going to grow. Like this is going to be a problem as rates are this high and prices are this high for homes. And that's sort of the final mile that we have to build out, and it's something we're working on. So some of it will still have to be backstopped by documentation and humans reviewing it in the background, but we have been able to take an awful lot of data that was never part of a decision before and put it through what we've built. And I know I'm not alone. I think a lot of organizations, whatever solution they built, follow the same methodology, but I think that's the real change. It's not just a bureau-based decision anymore.
Yeah. I have a follow-up question to that, but I want to make sure if anyone else on the panel, if they want to contribute or have any thoughts to add on to that before I go to my next question.
I'll maybe just add one quick comment. So I really agree with a lot of what's been said, and to Jesse's point about the auto adjudication kind of breaking down. I think a lot of the times it's, especially when you have a volatile environment, auto adjudication can look at what information is presented and then tell you what you can do with it, right? But then the whole garbage in, garbage out concept is, if you tell like somebody wants to go bid $1 million and then it appraises at 850 or 900, like your model's not going to pick that up, right? Unless you have an AVM model that can give you a confidence interval and the property value and all of those components. So it's almost like auto adjudication's web has to expand, where it's the information you're given and then the variance of the information you're given, or all the the known unknowns is really kind of what they call it. So I think that is definitely, to Nick's point, has come a long way of the amount of information you can get on all these sorts of things. And yeah, I think it'll continue to improve to, I guess, to expand the scope of auto adjudication and the limitations of how many of them fail.
Yeah, I think about it in a couple different ways like that. I think there's really two things that we lump it all into auto adjudication, but I think there's been an evolution from, hey, congrats, you got a pre-approval, which means I didn't check that you lied about anything on the application. But based on what you said, yeah, you're pre-approved. Then it kind of went to, well, we can probably say this is approved subject to document verification. And then it went to actually issuing a commitment. But still, I need to make sure the documents are okay. And I think we're sort of, tiptoeing into that area. And then the other part, the real hard part, and I think what Nick is addressing is, that's somewhat useful, maybe from a marketing perspective, because I get more borrower engagement if the borrower's like, oh, wow, I'm approved, I got a commitment. Maybe I stick with that particular lender relative to just I got some pre-approval certificate. But the real win is going to be when we get better and better at reducing the friction of the documentation review, which we are. We are getting better at it. There's still room to go. But I think the future looks bright in that area. I think that's where, once we start removing the document friction, both sides of the marketplace are going to benefit.
Yeah, absolutely. I think document admin is a huge portion of it. And Nick, Greg, I know at Lendesk, our vision is a mortgage in minutes. We really want Canadians to be able to get a mortgage in minutes. And we have these conversations about speeding up the documentation process, and we're getting there. Alex, I know when we talk about the concept of a mortgage in minutes, you have some insight on that as well. So I guess this is a question for Greg or Alex or anyone that wants to contribute. But when we talk about a mortgage in a minute, what are some other things that lenders aren't thinking about or need to be thinking about? Document admin is one, speeding up that process. Is there anything else folks on the line should be thinking about?
I think it comes down to almost just the framework. So instead of mortgage in minutes, I really kind of look at it as like a advice in minutes, where it's not so much that the goal isn't that I can get a mortgage as quickly as I came in. It's that I leave with the solution that fits my needs, and then whether that mortgage comes like the next day or anything like that. But I think that's really where the focus is right now, because people now more than ever, with rising rates, higher mortgage payments, cash flow differences, rental incomes, vacancies, job losses, like there's a lot of times where the solution doesn't fit anymore. So it's not even just I guess the focus is heavily usually on origination, but it's also on how does your advice evolve after origination? So how are you then able to re-engage and kind of keep your customer involved? So I think that component, whether it's at origination or after the fact, is the same technology that can reduce it to minutes, but then just the life cycle of it is also really the focus, I think.
Yeah, I was gonna say similar, that another, like, the bulk of your question was what should we be thinking about that maybe we're not. And I think want to a little bit build on what Alex was saying. I think that there's this weird sort of line between, should I as an organization intervene with trained salespeople to help bring the customer further down the funnel, or should I let the borrower really get the power to make that decision of which way they want to go? I want high automation or I want high touch. And it's an interesting conversation, because in theory we say, well, we want the borrowers to have more power, but borrowers are fleeting, and borrowers don't know what they want. And so borrowers are like, I got all the power, I can make the decision, but it's not necessarily going to meet my needs. And there's going to be this weird thing about how do we figure out how to do that? And when do I intervene? Or when do I let the borrower direct the process? And I think that's a fine touch to figure out.
Yeah, absolutely. Nick or Jesse, any thoughts or?
Yeah, I
But
think to go with Greg and Alex, that when to intervene is so tricky because I agree with Alex is that they want the solution and they think they know what the solution is, but when they really get into it and we start looking at the entire picture, those solutions vary drastically. And so, what is the right mix of letting the client control versus letting the machine control, or today it's more letting the individual, we'll call them salesperson, for lack of a better term today, help them through what those solutions are. And because there are so many options out there, it's really tough to fully automate that adjudication process.
There's two things I'll layer on. I think when to intervene is what I think I'm currently obsessing over, and um, we've actually just part of our remittance business. We have the privilege of having connections with a lot of different global banks, and two banks I'll call out. One is Danske Bank in Denmark. They actually have a D2C solution that works pretty well, and they did a lot of beta testing to find out when it is to intervene. I can't remember what store that was, but where if you grab like a black basket, it means you need help, and if you have a red one, leave me alone kind of thing. That's their mindset. Is like, how do you identify who needs the help and when do you jump in? Like, when am I turning them off versus when is it creep factor, or when is it just right? And the advice we got from them was, after you turn this thing live, watch for your drop off, watch for when people go idle, and you're going to have to pivot quite a bit. And I think it's going to be different depending on the demo that's coming through. And the second thing I would pull on is just next door. If you go over to Sweden, talking with SEB on, if you want to know, like, when are we going to get to like truly like the end-to-end digitization, and it has to come with open banking. I think what the Swedes have done is quite miraculous in that their credit bureau, their land title, their income, their taxes, everything is in one central repository that the government runs, which is that might be overstepping for some people's opinions, but I thought it was very cool because the idea of having to provide supporting documentation is not a thing. Because everything is immutable and it's all accessible. You're just managing consent. So I think this has been executed in parts very well in various parts of the world. And I think if we're, well, as Canadians, I think the real win is just going to take the bits and pieces that make the most sense from each of these countries and turn it on. So hopefully when I'm done, I've got a little bit of a rocket from the States, a little bit of Danske Bank, and a little bit of SEB, and it's going to work really, really well.
Yeah, I love that answer because that ties into a Q&A that we've seen come through. Someone is asking, end-to-end processing, when is this coming in Canada? So do we have any hypothesis of this, or is this something we're going to keep under wraps?
I can maybe, so actually, I guess, anecdote or history component here. So when Perch actually first started, the concept was a fully digital mortgage experience with no advisor whatsoever. And what we found is there was tremendous amount of drop off, basically, because nobody felt comfortable going that far in the process without a person telling them like it's going to be okay, basically. Because as a mortgage advisor, you're more than just the one giving them the paper. Like, in a way, you're the therapist, like, and like they like knowing there's a person there. So I think my take on it is that I don't think it'll ever be fully end to end. I think it'll get up to 80, maybe 90% automated, where one mortgage advisor can do 10 times as much volume as they do today. So it's not like there's going to be some serious economies of scale. And I think you'll see a lot of fragmentation in the market of how many people offer mortgage advice, or defragmentation, sorry, I should say. But yeah, I think overall there will always kind of be that there is going to be an intermediary to help narrow the focus and answer those questions, because it's just too big of a, like, you're not just checking out and buying a pair of shoes, that you're buying $1 million house and then you're going to get $800,000 of financing. So naturally you're a little edgy to do that. So you want to ask those questions, especially if you're a first-time home buyer. So I could see an end-to-end one for maybe like investment properties or people buying bulk portfolios that are a bit more experienced, but there will always be a market for people who want the advice that don't know everything, really. I guess nobody ever knows everything. Some people think they do, but there's always going to be room for advice, I think.
Well, I think if we think about digitization and not just that. I mean, again, I think I want to evolve this conversation, like this definition that we're accepting that means no people, because it's not going to ever exist, I think, but it's going to be very challenging. But so if we just took the fact that out for a second, and it shouldn't be that hard, particularly today. I think Nick would be able to jump in here, but for my own customers as a lender, for my own customers, I think I'm probably further along right now because I know a lot about them. And so Nick's point was, well, when open banking comes up, I'll know a lot about my competitors' customers too. So great. But I guess, and also whether it's a purchase or whether it's a refi is also going to be a big deal. I know what's working on in the States. What we work on is always approved. There should be a way that if I'm just sitting here in August and, I log into my portal and it says, hey, Greg, congrats, you're approved for an $800,000 mortgage, just like a credit card. Push the button. You're approved. I know enough about you that I can just tell you that you're approved, and then we'll just do a couple of little things and then we're done. That we shouldn't hopefully be that far away for my own customers. There's enough information.
I would agree. I don't think we're actually that far at all, because like the only unknown for most of our existing clients is the home. And I forget who mentioned it earlier, but like the AVM models have come an awful long way. And that really plays in really well, where it would be for your own clients. Is it possible to get to no doc? You'll get damn close. Like I'll still need that agreement of purchase and sale, but but we can get away with a lot less depending on the tenure you have and what data we have on them. Because I have people that are sitting there that have had their payroll going in consistently for over 10 years. Like that's a very different posture than a stranger on the street, for sure.
Yeah, let's say, for example, I want to get a refinance and I've been a customer of yours for a while. I could actually go right through the application approval and probably even virtual signing with pretty heavy digital, like digitization.
You can, and actually that
probably
plays
do that.
You play on a point to the digital signing thing. I think is very important. That was something that we all learned through COVID, in that depending on the jurisdiction you're in, the legal community was very old school, a lot of paper, a lot of fax machines, but definitely COVID forced digital. I think I closed on a place over Zoom, and I couldn't believe that happened. Like usually you have to travel to meet with someone, but and that's definitely improved. There's a lot going on in that space, and I think it's really prudent as a lender to get in front of it, because while that portion is not really your job, you still own the experience and I will share that even if it's a legal provider or an in-person appraisal, those things can actually put a really bad taste in people's mouth if they don't go smoothly. So if you can get involved in that and almost drive the digital solution by lining up providers that will align with what you're trying to do, makes a huge difference in the overall satisfaction for your client.
Yeah, I love that, because we're talking about concepts or trends, auto adjudication, digital signing. My next question was going to sort of be those on the line that are looking to, what should their next step be? What should they be doing tomorrow to make sure that they're kind of trending in that direction? And Nick, you mentioned working with digital solution providers. Like, is it a matter of getting technology to help speed up your processes so that you can sort of focus on the human touch aspect? What should lenders be doing on the line, essentially, to be thinking about all this?
It can be complicated. Well, I feel it might be more so for me than some others, only because I am a federally regulated financial institution. So I've got a lot of things I have to abide by. But there are solutions out there for digital signing, for example, that are very much Bank Act compliant, and this is doable. And it does have to be nuanced by jurisdiction. Like I do operate from coast to coast to coast, so that does require some nuance there. But it is doable. So it's not just about finding the sexy solution. It's like, does it align with your objectives, and is it compliant? Like, does it meet all the regulatory requirements? And it's a slog, but it can be done. And I do encourage people to look at it for sure. And then even if it's things outside of your control, like what we're putting in place, for example, for digital signing, which is even part of the closing, is applicable no matter what lawyer is on the end of the deal. So we're controlling the solution, even though the service provider may change. And that's just something I would recommend looking at.
Got it. Anyone else have any tips for those on the line of what they should start thinking about today or tomorrow?
I'll maybe chime in on like product mix. So I think it's so very much I agree with the process orientation. I think that's a very clear sign when you're looking for how can I reduce the friction, not just for my borrowers, but also let's say if you're heavily relying on the broker channel, how do you reduce friction for your brokers? So make it easy for them to work with you as well. Because even post COVID, I won't name names, but some lenders have brought back wet ink signature policies. They've eliminated DocuSign, and it was kind of why. So now it's just like more friction essentially in making the process work, and then it affects the broker and the client. So really looking at both sides of the equation, your supply and your demand, and kind of reducing friction points. But also I think product mix is going to be a really big one. So when you need, let's say, a 2-year credit history, and we're going to have record levels of immigration where they might not have an established credit history, but they have established credit history elsewhere. So people with new into Immigration Canada programs, how do you take a look at it and make it even maybe more inclusive than they already are? Looking at second mortgages, when you've got clients that can't qualify for the refi, have tremendous amounts of equity in their home, things like that, of how can you come up with solution that kind of, so when you start seeing a lot of declines for people that are, especially if they're existing customers, like what can you create to essentially solve the pain point, or who can you partner with that can solve that pain point for you? So if you don't want to bring that product in-house, then partner with somebody who can bring that product, and then at least keep them in your ecosystem. Because I think to Greg's point, to Nick's point, to Jesse's point, that portal is essentially your ecosystem, and your goal as a lender should be, how do I keep my clients in my ecosystem? And it doesn't necessarily mean you have to offer them all of the products. It just means that you're the person they go to when they need help. So I think you need to equip yourself to help them, whether it's through your product or somebody else's.
Yeah, that's that's just something that I wanted to touch on as well, Alex, which is within the ecosystem, where else are our borrowers seeing friction? So we work with lawyers, brokers, and insurers, and how do we make our process in working with them easier? In a lot of instances, with consent, we could push information to insurance agents, and they can get auto approved. We can much more. We have all the documents, and again, with consent, we can push a lot of information to our lawyers to make that easier on the client, because it's amazing how many times those things can break down for the client and create a really terrible experience where you as the lender have the information, and with the right systems can make that extremely effortless, and in turn a much better experience for the borrower. And you're gaining huge fans with your lawyers, your brokers, and your insurers if you're operating with that mindset.
Great. Thanks, everyone. I have one more question for this panel. I wanted to remind everyone on the audience or listening in to please submit your questions in the Q&A widget, because we'll be getting to those questions very shortly. I actually saw one question pop up in the Q&A that I think is timely to input here. And the question is preferred platform for MIC and borrower. I'm going to assume that means like for a MIC to engage with their client or their borrower. Greg or Jesse, do you want to take that?
Yeah,
You go first, Jesse.
Sure. I'd have to be clear on what platform. Like, so at our office, Calvert, we use a platform for engaging with the borrowers, which is a CRM, so a Salesforce or a HubSpot, and you want to use platforms that you can automate, but also gain information from. What communications are working? What is the right cadence of follow-up? What is the right method of communicating? Email, phone call, other. So in terms of the client facing, there's a lot of amazing CRM options out there. But then on the ingestion of and underwriting platforms, there's a few really cool tools, a few really cool off-the-shelf options out there. I know some MICs have looked to develop, ourselves included, and we quickly realized in our analysis that we're not developers. So we always like to think through what is proprietary, what is important for us to own And if it's not proprietary and going to create a moat around the business, then you should look to buy. And when you look to buy, do a proper analysis around what the options are out there and what will best serve you. And also what your needs are, not only today, but in the future, because a lot of these off-the-shelf options will have very different views of the future and ensure their views align with where you're going. So there's great CRM options, there's great underwriting options, and really think through build versus buy would be my recommendation in all of that.
Yeah, my experience is, for example, at Lendesk, we have a little over 80 mortgage investment corps, I think, that use our LOS system, which would be really mostly for underwriting, receiving deals from mortgage brokers. But I think when the question was, well, so that I can still also talk to the borrower, typically, I think if I'm getting mortgages from brokers, then I don't have much communication with the borrower until post-funding, which I think Jesse's right about. I've seen lots of Salesforce integrations and things like that. We integrate with them, so it makes it easy post-funding. If I'm starting from scratch, like I don't have much of anything, Mortgage Automator is also a tool out there that has like sort of the full pre-customer underwriting and post-customer investor relations, like the whole 9 yards, like business in a box. But I agree with Jesse, not just because it's self-serving, but I just really actually see it in the industry is that it's expensive to try to create the system I'm going to need, but then also make sure it's connected to all the places that I can receive business from. That's one of the big challenges. And so, when you're on our platform, for example, you can get business from any mortgage broker. So that I think is really important.
Great, thanks both. I see another question coming in that kind of tied into auto adjudication, but it's pulling docs from source. So the question is, when will we see a shift in lenders using direct source data, not documentation, for verification of income, assets, and liabilities in Canada? Nick, why don't I pass that over to you, and then anyone else can chime in.
Already has for some. Like I think Greg prompted me on one thing that's very true is like if they're a client of yours, then you have other sources of data that you don't need to go ask. I think a good example that I gave is like multiple years of payroll going to an account is a trustworthy source. And then for non-income related documents, we are shifting that way, and that's something that we're leveraging with Greg on his platform using Flinks to be able to go get information on other assets the client would have to support down payments or assets to support bolstering an application that might be on the line. Income is going to be the biggest one. So if you don't already have the payroll coming into your accounts, that's what I say about open banking. Like it's definitely, like I have conversations ongoing with CRA in the interim to see what can be done sooner than later, because I think that is what gets us to end of job, because it's the one that's most commonly fudged. When I said fraud for shelter, these aren't professionals trying to steal money. They're just trying to get a house, and it's like, and I get it, but at the same time, if you're that stretched, we shouldn't be lending to you, and that's why we want that. For now, it still is document based. I think we're probably maybe just a year away from being able to see some movement in that space. At most, it's a couple of years. But in the interim, like it's like we do have our best practices. Like we do have our ways of validating both with Revenue Canada and other banks, et cetera, as to the authenticity of a document. But of course, we still end up having to employ a fair number of people that are very well trained in this place to actually catch anything being doctored.
Yeah, I think a couple things I would add to that. I think the question probably has a bit of like fraud intervention, but also efficiency. And so, and I think what we've recently done, and it's very, early stage, but we're actually proud to even got here, which is, we just service a lot of mortgage brokers. And so when mortgage brokers are sending the business into the lender, we've now built where they can actually send the documents with the data. So I send the application and the documents. Okay, great. But we've also taken it such as to make the, tell with a report, tell the lender, where did this document originate from and what has it been done? Well, the customer's seen it, or the customer's touched it, the broker's touched it, or, only the customer's touched it, but the broker hasn't touched it, or Nobody's touched it. It came direct from source. And so that's early and it's basic, but it's a step, like, and we're pretty proud of it because it's going to go, that can bring us to the next level, I think. Keep making that, because if you have to look at just a little bit less documents, then that's always going to be a plus.
Huge.
And then maybe just one quick comment on it. So I think I completely agree that having to automate pulling information from documents is going to be completely replaced once you have a direct data source, essentially, to give you the information you need. So I definitely see that coming. There's already instances of that where you can do things like pulling CRA documents, pulling bank statements, et cetera. That's all there. And in an ideal world, yes, then you'd have open banking. It's kind of like a complete application. You can immediately just process, everything's attached. But I'm really curious to see what the long-term implications of that would be, because I think a lot of the focus is then on the origination of I can get the deal through the door. But then the other implications of that could be, well, as a lender, you then can see if your client's income position has changed over time, and then maybe you stop auto renewing. So I think there's a lot of things that come from that, where on renewal, maybe you actually could be kicked off or essentially not renewed because people can see if your income situation or if you still qualify for your mortgage. So I think like with that, on one hand, you have a huge uptick in risk management policy because now you have basically a live pulse of the income profile of your entire book, which would be phenomenal from an IFRS 9 standpoint, from all these other policies. But then as a user, it's kind of, I'd just be curious to see how that would kind of play out in the long run of like a live feed of basically, let's call it a dynamic GDS, TDS on a month-by-month basis of your entire book could be a gift and a curse at the same time.
Yeah, interesting. You mentioned the CRA and pulling info from there. And I know at Lendesk with our Finmo platform, we have a solution for that. So I just see a question popping up. It's actually in the chat. Are there any APIs currently available with CRA to integrate the direct sourcing of income data?
There aren't currently, no. I think you highlighted there are some providers that do have this service stood up with CRA, so there are third parties that do it, but there's nothing direct with CRA that I'm aware of, no.
Although I believe the service has recently got shut down by CRA because we were using a bunch and they would back end it through an accounting rule, like accounting firms can get direct access. So they were building it that way and getting direct access. And it was actually a really great service. Client has to sign off, but my belief, and correct me if I'm wrong, is within the last month, CRA has shut all those providers down.
Yeah, that's what I've seen as well.
It's my understanding of that too. I mean, it's very frustrating. I mean, the APIs and that, somehow still exist because they do e-filing and do all that with accountants. There's some kind of thing. It's incredibly frustrating. And it's shocking, to be honest, because, the big banks in this country are pretty powerful and pretty good lobby. And we still can't seem to get through this government agency to be able to figure this out, because I think Nick's point is well taken. I mean, if I could get documents from source, from CRA really instantly, that's a really heavily reliable indication of income, because that's what actually happened. And so, I mean, man, it's frustrating and shocking that we're even having this conversation.
Yeah, I think because with fraud, basically, it's like, do you have the ability to commit fraud, the intent to commit fraud? If you cut out the ability, then yeah, because essentially if all of your documentation, if you pull bank statements, no fraudulent bank statements. If you pull income docs, no fraudulent income docs. I think eventually, it will get to there. And I agree with Greg that once it becomes, a big enough problem that it moves to the front of the line, then I think there's going to be implementation from a policy standpoint to make those APIs readily accessible, because you also then don't want to force a monopoly where one person has this API to CRA docs and everybody has to go through them to get it. But I think overall, then once you have that infrastructure, a lot of people can plug into it, and then a lot of things, good things can come from that, and having a more streamlined system that then also has less leakage.
Got it. Yeah, thank you. We have one last question. Just a reminder to everyone on the line. We've got a couple minutes left. If you have any questions, get them in now. But I'll move to the next question. And I've actually never heard of this product. So maybe even if there's other lenders on the line that have heard of it. The question is, has anyone ever used Google Cloud's Document AI for Lenders product? I understand it's an out-of-the-box solution for using machine learning to pull information from documents automatically. Google
could
Cloud
jump in- I
document
guess I could
AI.
jump in. I could jump in quick on that. I mean, we know about it, but one of our challenges is most of the major FIs Google some kind of swear word or something. It's like blocked. And so even if we built it, the fact that we're trying to get through a security questionnaire on that or any type of an audit wouldn't be useful because and I think that's going to be what would be one of our challenges. But there are other products out there that do that, and it's stuff that we look at. But again, it's kind of like that chicken and egg for us. It's like, well, is there going to be, we build this, it's a very expensive thing to build. Is there going to, we're not very much into the build it and they will come philosophy. So we're going to see that there's a use case and that the FIs will actually accept it. And then there's a bit of a chicken and egg here for us anyway.
Yeah, we have the flexibility to use those tools. What's important, one thing that's important that we look at it is where are the servers, because of, and a lot of times they're unfortunately not on Canadian soil, which poses risks to us that we're not willing to take. But we're using an automated documentation ingestion system, and it works well. It's not Google Docs though.
Right. Thanks, Bo. All right. Those are the audience questions. We'll wrap it up. I have one last question for all of our panelists. So when we talk about digitizing your mortgage business, I'm sure sometimes it can seem overwhelming, or, there's sort of a mentality of, if it's not broken, why fix it? It's working fine. Implementing technology will just rip apart what I have in place and it'll cause more disruption than help. What would you say to anyone on the line who's kind of thinking that way? Like, what's driving the need to digitize your mortgage business?
Maybe facetiously, I'd say if anybody who thinks that way, thank you for the business that's coming our way. But essentially, I think it's just a matter of, if you focus a lot on how people have bought homes in the past, you're going to have one demographic of clients that'll keep coming back to it. But eventually, as those trends evolve, you have to be able to serve a bigger market. So people are expecting quick answers, are expecting it on their phone, on their computer, on the go, after hours, during work hours, before work hours. So you have to kind of be able to adapt to it. So you can either throw a lot of bodies at it, have a ton of serviceability, and do it manually. But I think you need to have a solution where it can be a hybrid. You can't just cut it and switch over. You're going to have to parallel and eventually phase it out, but always be thinking ahead of, what does it look like 5 years from now? And then how do I get there?
And to layer onto that too, just look how Canada's growing, like where people are coming from, it's digital first. So you can't apply, I think, the old way we used to do things to new Canadians. It just doesn't work, because they're so much further ahead than we are in so many from the core corridors that people are coming from, namely like India, China, Nigeria, etc. So I think there's a must to do that, because if not, then much to Alex's point, people will just migrate to who is doing this.
Love those answers. Yeah, you see that a lot with everything these days. Back in the day, I used to make a restaurant reservation by calling up the restaurant. The other day I made it at 8 a.m. online, and I would never go back to the old process of calling up a restaurant. I'd sooner find a new restaurant. So, I think those micro behaviors apply in all facets of life.
Although, are you cool with all the QR code menu things? I feel like that needs to return.
COVID brought back the QR code. It died, and then it came back. It was the great QR.
Wait, Nick, you're a fan of the QR code menu?
No, not at all. It takes so much
no.
longer. Just put the menu on the table. Yeah, but anyways.
Yeah. No, it brought back some good things, and it brought back some not great digital things. It was a resurgence of something I did not want.
Scrolling through that 100-page wine list on your phone.
Yeah.
No good.
Although with the the reservation online, to go back to the personal touch, sometimes it says you're booked, call the restaurant, hey, talk to the person on the phone, give them the why, and sometimes you can get in. So there is always going to, I think there's always going to be that mix of the digital and the human touch.
Yeah. Well, when you have a problem, that's when you want to talk to a human. That's not when you want the bot. That's not when you want the lead form. That's when you want the human.
Yeah.
All right. Thank you to all of our panelists. It was lovely chatting with you today. Thank you to everyone on the line that attended. It was great having you. And Danielle, I'll pass it back to you.
Yeah, just quickly before we close out, I just want to say thank you so much to our panelists for your incredible insight, and of course to you, Christina, for moderating the session. And thank you to everyone who tuned in today and also submitted questions. We, of course, encourage you all to join us as a member of the CLA and participate in the FinTech lending community and to continue attending these great panels. You can find them at lendersevents.com. And again, thank you so much to our sponsor, Lendesk, for this session. And with that, I will close it off here and have a great day, everyone. Thank you.
Thanks, everybody.
Thank